What's up, homies? Welcome to the channel. Today I'm talking to all you retail investors because if you're like me or 13 million other people, you probably do or have used Robinhood. And if you're a curious person, you've probably also wondered how they even make their money if they're not charging you anything. Because they completely disrupted the financial market once they became a mainstream platform for the everyday investor. In the finance world, there used to be this job of stockbroker. Now this job doesn't really exist anymore, but what he did was be the middleman who'd help facilitate every trade that you made, and he would charge you a commission for that. Additionally, if you wanted to be involved in more complex trading strategies, like options or trading on margin, then there'd be extra fees associated with that. And again, this job doesn't really exist anymore because all stockbrokers have either retired or they've transitioned into either a registered investment advisor or a financial advisor. Back in the 80s though, some of these guys were charging $45 per trade. And I did the rough math, so you wouldn't have to, but that would be the same as paying $160 today, adjusted for inflation. And just the thought of paying those commissions, though, hurts my wallet. I think that the stock market has been vastly opened up for the everyday person to invest compared to the previous generation. Just check out this graph from Deutsche Bank. It shows the amount of trades by volume relative to what the trading costs were at the time. And it's obvious to see that a lower commission leads to higher trading volume because it lowers the cost of entry and more people are able to start investing. And I think that Robinhood has played a huge role in making the tools for building wealth more accessible to the average person. This comes at a cost though. As more people are able to trade at a low cost or even at no cost, this raises the amount of volatility in the market. Imagine that everyone in the world has an app on their phone where they can trade stocks. This sounds awesome. But in that same world, let's say a bad piece of news comes out about a certain company. We'll just say Tesla. If everyone who owns shares in Tesla receives that news as a notification and is then able to take action on it just from their phone rather than having to call a broker and then pay a fee, a lot more people are going to sell off their shares because they're afraid of the market going down or of Tesla going down in value. So that of course leads to a higher volume of shares being traded, which also increases the amount of volatility in the market. So Robinhood has definitely added some volatility to the markets. They were one of the first to pioneer offering commission-free trading. But if they're not charging us per trade, how are they making any money? And I'm about to share with you the 3 ways that Robinhood makes their money, but I would feel like this is a pretty good point where we can all just pause, like the video, and then press play again. So Robinhood does have multiple ways of bringing in income, but they primarily have 3 sources of revenue. The first is through a very short-term investment that they use your money for. You see, Robinhood is not dumb. They're smart, and in an effort to incentivize more users to keep more money on their platform, they offer 0.3% APY, which means that over the course of a year, they'll pay you 0.3% for the money that you don't invest. So any money that you just have in your Robinhood account but isn't invested in certain stocks or other securities, they're investing that money on the back end, and then they pay you 0.3% annually on that money. And ultimately, this adds up to not much at all for you. But it tricks more users into keeping more money on their platform because they think, oh, this is a good idea. I'm getting money back from this. They're paying me a percentage here. When really, you're not making almost anything at all. So in the background, Robinhood is using your money to make short-term investments very quickly. Because from their perspective, someone should be making a profit on that. And if it's not you, it's going to be them. The second way that Robinhood makes their money is through a monthly membership fee to their premium service called Robinhood Gold. And in exchange for your membership fee, you get in return higher instant deposit limits, more research and data about securities, and also the ability to trade on margin. And I think that having more useful data is always very valuable. I also think, though, that if you're smart, you can probably find that same information for free somewhere else on the internet, if you know where to look. And while I don't think that margin is a tool that everyone should be using, I don't think that $5 a month is that big of a deal just to have more information and to be able to make better investing decisions. So if you're already on the platform, I can see why you might want to upgrade. The third way that Robinhood turns a profit, and you're not going to like this one, is by selling your data and your order history. You see, Robinhood brings a ton of people to their platform because no one wants to pay for something that they could get for free somewhere else. But as the old saying goes, if you're not paying for the product, then you are the product. In the case of trading stocks on Robinhood, they let you make trades for free on their platform, but then they turn around and execute that trade through another firm, and then they also turn around and sell that data surrounding your transaction to other firms and big banks. So they earn a commission by transacting your order through another firm. And then they make another commission by selling the details of that, of what their users are buying and selling, to other investment firms, to other hedge funds and big banks, which gives those firms insider information about what investors are doing, what they're buying and selling. This helps the hedge funds predict where the market's going, and it also lets Robinhood double dip on their profits every time you make a trade. And this practice, while questionably unethical, accounts for 50% of Robinhood's annual revenue. It's things like this, and all the flack that Robinhood got surrounding the GameStop trading frenzy, that have recently sort of given them a bad name. Some people are switching to another platform because they don't feel like Robinhood really cares about their users. But I think Robinhood is here to stay, and they'll probably retain a lot of active users because being on there, it feels like a game. It kind of feels like you're at a casino, and it's nice to see that you bought a stock because there's all the confetti and you feel like you won something. What do you guys think though? Let me know in the comments if you've made money or lost money through Robinhood, or what platform you're thinking about switching to. I'll see you guys next Thursday for the next video, and then Tuesday, Thursday, you know how it goes. As always, I love you guys, and I'll catch you next time.